Wow, thank you, thank you. I want to do another update on trading. I think it's been a while, and I'm sure most of you who are already on the WhatsApp group, you've been following, and you realize that the trading that we've have been doing did quite commendable returns this week. And so I would like to be able to take us through that briefly. And this particular presentation today has a bit of training towards the end. So please watch until the end of this particular video, because I'm going to take you through the exact principles that this particular trading system uses, so that you can be able to understand how it actually trades and how it actually achieves the results that it's achieving. So we will delve into a bit of meat in this particular discussion with respect to trading. So without much ado, let me now take us through go through the just an update of what has happened this week. And this again, you can see where we are with respect to the trading. So let me just go through some of these numbers again. As I've mentioned at the top here is the link where you can always access this particular trading statistics of this particular trading system. Okay, and you can see the statistics are right here on my FX book. All right, so of course I call this particular system FX Views, and this is a live account that is on IC markets. So it's a real account. You can see the owner, this JKKFX real account, IC markets. It uses technical, it is automated. The leverage is 1 to 500, and it is running on MetaTrader 4. I have the trading privileges, all right, and this is fully tracked. So all these statistics that you see here are real, and there's no fake, because my FX book is a third-party validator that validates what happens in any trading account. So basically that is about this. Oh, and by the way, this week I decided that I can be given rebates back, okay, which again my FX book is able to give. So I'm actually earning money, a bit of it out of my own trading, courtesy of my FX book. So probably that's a plus for my FX book and so on. So this is basically the trading account that I opened on the 23rd of December. All right, and you can see that's the opening and that's the deposit. This green dot here is a deposit. You can see the green dot is a deposit. I again added, and by the way, just to disclose here, so I started with the correct balance. And as I mentioned in earlier videos, one of the things that I was doing with respect to this is to be able to do the correct balance with respect to this particular system. So I started with the correct balance. I added another amount here on the 15th of January. I also added another deposit on the 12th of January. Not quite significant, just a small amount. Then I added another amount here. These additions don't really interfere with the statistics. The statistics are quite independent of that. In fact, probably the only thing that it informs is these two numbers, the actual gain and the absolute gain. So the absolute gain is statistically what I am supposed to have earned out of the money that I have put in. All right. So if you look at the money that I've put in vis-a-vis the timings that I've been putting them in, what I've earned is 38.48% since December 23rd. But the absolute actual money that I've earned is 48.24%. But that's mathematically just probably what. But I think what I would like you to get out of these two numbers is that this system is actually good. All right. Any person who makes 38%, for that matter, in 2.5 months. Actually, this is exactly 2.5 months because I started 1 week to the end of December, and now I've done another week in the month of March. So this is so you have the whole of January, the whole of February, and 1 week in December, and then another week in March. That makes it 2 months and 2 weeks. All right, and if I can make 38%, that is incredible. And if you can check this number again, which is very good to look at, that's the equity. Is basically telling you that I don't have any floating, too much floating, P&L or losses. Currently, you can see my equity is almost equal to the balance at 99%. This is again a very good number to inform. The only thing that I need to mention on this particular video is that in the previous video, the highest drawdown that we had was was slightly above 7%. I think it was 7.4 or something like that. But this week, we achieved a very, very high drawdown. That is 17.41%. That I think is a very high number, but still very good in the sense that it never lost money. We actually made money out of that particular scenario. And this happened at this particular period here. You can see that actually at this drop here. Okay, if you can see that, you can see there was one time that it was a 30% equity here. All right, briefly, and then it closed in profit. Now, that is the magic of this particular system, in the sense that even when the market goes against it, it's able to come out on top. And I'll explain those particular principles that this particular system uses to achieve this kind of trading, where it always comes out profitably. All right. So as you can see the numbers here, of course, today, of course, was not trading. This is Sunday. I'm recording this this particular video on Sunday. So of course there was no trading today. And so this is a new week. So of course we have not begun trading for this newer week. But now the previous week, which is March, we actually did 7.9%. That means for the average of the whole week, we were doing more than 1% per day. Now, that is incredible. So again, these are different numbers that you can be able to see. And I think we'll come back to see a number of things here. Probably what I would want to just show here, if we go to the year 2024, and if you see, we only traded the month of December, which was just one week. And you can see in that 1 week, we did 2.59%. All right. And you can see the type of the currencies that we were trading, basically pound and euro. All right. Then in 2025, we have had now 2 months, and now we are beginning the month of March. So you can see in the month of January, we already managed 12.53%. In the month of February, we did 19%, 19.03. And then the month of March, we've done, we are already at 7.91. This is incredible. Of course, I think it was a windfall kind of this week. I think for me, even if we don't do any other percentage the rest of the month, 7.9 is a good return for even the whole month. All right, so we've really done incredibly well. Again, if you can check, I have added a few other currencies that I'm trading apart from the euro, pound, and I have added Australian dollar against CAD. I've added Australian dollar against New Zealand dollar. I've added Swiss franc against Japanese yen. What I've also done, which is interesting, I'm still considering what to do with what I've decided about this. I have removed euro dollar because it's carrying the same risk as pound dollar. So when I run these two currencies, I'm basically doubling my risk because I'm playing in the same market. Pound and euro are within the same zone. It's actually a European. Those are European currencies. The major European economies. We are talking about Britain and the European Union. Okay, against the dollar. So I find that would be a little bit too risky. In fact, one of the things that actually caused the big drawdown was because of the risk I was carrying on these two currencies. So I want to reduce one of them. So I've actually knocked out, after some assessment, I've knocked out Euro USD, but I'll see. Probably I'll add it back, but this time I will reduce the risk exposure to that particular currency. That said, these are other statistics that you probably might want to just have a look at. Again, you can always click on this particular link and check out these particular risk ratios for the month of March, and you can see the risk ratios with respect to these different instruments that I was trading. So with that, let me go quickly and let me go quickly and talk about. Let me go quickly and talk about how this particular system trades. All right, what are the principles behind this particular trading system, so that you can be able to understand how it trades. So let me get into this. I change this particular whatever to where we are supposed to be trading view. Okay, so this is the one here. Okay, great. There it is. Yeah. So these are the 5 principles that this particular system uses. All right. So there are 5 of them, and I want to just go quickly through them. Let me just get that right here. All right. So the first principle is that what is a true price when it comes to any instrument. What is the true price? I've written these notes over using a trading view. Okay, so this in fact the chart of euro against the dollar, and this is actually how it has been. By the way, just for your information, this move here, all right, this move here, and it took 2 days. All right, this move took 2 days, is actually what caused the high risk that I was having. All right, can you imagine how this? And I was on sales. I actually started selling euro right at the bottom, right at the base of this particular. Actually, it was somewhere here. So it started selling, and it took 2 days for it to reach here, but we finally got out of it. So what is the true price? All right, and it's been statistically found out that the true price of any instrument is the current price. I mean, of course, that's a misnomer. I'm sure you are wondering. I mean, of course, that's obvious. It's obvious that the true price is the current price. But what this basically means is that prices tend to come back to where the true price is. So even when prices move, like right now what it has done, moving up to this point, it probably in future will want to come back and cover this distance and come back to where it was before. All right. But you could also say, has this instrument been at this point before? Yes, it has been. And you can actually see, as much as it came off this price, it is tending to come back to where it was. So it's a misnomer, basically, to mention this, but it is a principle behind this particular trading instrument system, which means therefore that it always sells. When the market goes up, it will sell. When the market goes down, it will buy. All right, and will continue doing that until it gets into profitability. So that's one of the principles that it uses. And for me, as having been a trader for quite a while, I think this is a very powerful principle that can be applied on any instrument, whether you are talking about stocks, whether you're talking about whatever it is. The current price tends to be the actual price of and any deviation from that price, the market will want to go back to that particular price. Now, the next point, the next principle that this particular system uses is where it uses time instead of using an indicator. All right. So this system does not use any indicators whatsoever. It is what is normally referred to in trading by traders as using price action rather than using indicators. I'm sure most of you, if you have been a trader for any length of time, you will have realized that indicators have one major problem. They repaint. Okay, and you can always Google that and find out about repainting of indicators. So an indicator can show you that the market is supposed to go up, but for some strange reason it goes down, or the other way around. All right, so indicators is normally the Waterloo for new traders. Okay, so if you don't know how to trade, of course, normally people will begin with indicators and so on, but you'll realize that over time, you realize that you will always be making more questionable or rather decisions that are not right. So using time instead of indicators, price action rather than indicators, is one of the principles that this particular system uses. The next thing that is very key to this particular system is recognizing trading sessions. All instruments, all right, whether it's the pound, the euro, the US 30, NASDAQ, S&P 500, Dow Jones, and all these other instruments, whatever it is, will respond relative to the markets at which these particular instruments work. So this particular system has subdivided the trading sessions into the traditional trading sessions that we know. The four of them. Is it the four or the three? Okay, so we have London session. All right. That begins around 11:12 a.m. our time here in Kenya. Is it a.m.? 11 a.m. All right, or noon. Okay, in Kenya right now. But I think tomorrow it will the time will come forward by 1 hour, so it will be at 11 a.m. Kenyan time is when when London begins. Then New York session, all right, which begins around 4 and pushes all the way to around 11, and then thereafter the Asian session, which kicks in around 2-3 p.m. Is it a.m. 2-3 a.m. Our time, or Kenyan time, all right. So this system has subdivided the trading period into those buckets, and it will be executing trades in those particular buckets, as it were. And in future training sessions that I'll have, I'll actually take you through exactly how it's going through that. In fact, I'll actually take you back to my FX book, because it will actually show you how it's been trading these particular instruments, and you can see when it placed the trades and when it closed them. The next very powerful concept that it uses is dollar cost averaging. All right, DCA. I'm sure most of you, if you have Googled or whatever it is on trading, you know about dollar cost averaging. And basically, dollar cost averaging is the concept of adding to existing positions when the market is moving against the original position. So if you have entered into a buy and the market is going down, then you can do another buy at a better price. All right. So with this particular dollar cost averaging, it will mean that you are adding into existing positions at better prices, and you will achieve two very important things. You will achieve a better take profit level. All right. You will achieve a better take profit level, and also better profitability. You will actually be killing two birds with one stone by actually applying this. So this particular system actually uses that particular idea. And the last line of defense that this particular system uses is martingale principle. I personally am a bit I've never had a good liking for martingale principle, but it is a very powerful principle when it is used sparingly and at the right time. So this particular system engages martingale not at the beginning, but towards when the market has really gone against you for quite a while. Then it will kick in. So in fact, it kicks in from the 11th order that the system has had. All right. And basically what martingale principle is that you are doubling the lot size or the volume or the amount that you are entering into the market that is equal to all the positions that you have had before. All right. And you double it, and therefore you will achieve profitability quicker, faster, because it is actually using the dollar cost average, but now on a very aggressive way. So instead of just adding a position, you are doubling all the positions that you have into one order, and therefore are able to get out of the system quickly. So the last thing that I just want to quickly do is to take you back to the system, and just to show you a few things on this particular system that probably will just let you know how it is, how it's actually trading. Sorry, here. So let me just so I want to show you how it the trades actually look. So here, when you come to this particular system and you click on browser, it will actually take you into the actual trades that it has been executing over the whatever period, and you can actually see just a few of them. This is actually on the 26th of February. And you can see how it closed those trades. All right. So these are trades that began here, a sale, and we caught profit here. A sale, and a buy and profit. So you can see all these are trades that it was executing and closing. You can actually even see this. So even when the market was going against it and it's making sales, it was able to get into profit just right here by executing these other sales using dollar cost average, and actually got out of it right here. This one here that we actually got, this is actually the move that took about 2 days. All right. And you can see this was sales. As the market is going up, it was making sales and finally got out of that particular position here profitably. All right, and you can see the others, the other currencies. I don't know whether I can be able to load them here. Let me see if I can be able to load that. Maybe I'll not be able to load this up, but I just wanted to take us through that so that you can be able to appreciate how this particular system works. Again, my approach to this particular system and why I'm educating you guys on this is so that if anybody would like to have such a system and run it, yes, I could be able to assist you to be able to have one. But the easiest way to utilize this system with no additional cost to yourself, because again, if you want this system for yourself, of course, I'll charge you for it. I'll sell it to you, and so on and so forth. Currently, I sell at $500, and this system needs a minimum of $2,000 to trade. All right. But if you don't want to go into the rigors of you setting me selling it to you, and then we set it up and run it for you, and so on and so forth, you can simply just subscribe. There is this button to the right on my Facebook. You can actually click that and subscribe to this particular system. So without much ado, I just want to close that. I think this is that is what I wanted to update you with respect to this particular system, and let you know that I will be doing updates whenever they are there. Again, please be on the WhatsApp channel. All right. The link is right below this particular video, and you will be able to get updates on how this trading is going every single day. So with that, no much more stories. I just want to wish you a great weekend and a great trading week next week. We see what the market will have for us. So thank you very much. God bless you, and see you next time.